It's evening. It's usually morning. Good evening, everybody, and welcome back to the Real Wealth Solutions podcast. I am your host, Greg Scully, joined as always by my good friend and partner, Darren Light. Today, we are joined by Dave Dubeau, the author of Money Partner Formula, a book largely about raising capital. I don't want to steal any of your glory, Dave. Would you mind giving us a little bit more of a thorough introduction to you and what you've been up to and what looks to be about almost a 20-year career in real estate investing?
Yeah, thanks a lot, Greg and Darren. Great to be on the show. Thank you very much. Yeah, I'm a real estate guy. I'm a marketer. I've been in and around real estate. My goodness, I realized I've been in and around real estate my entire life, actually. The family home was actually one unit in a sixplex that my father and my grandfather built in Taylor Flats, British Columbia, which is up at the beginning of the Alaska Highway. I know Greg used to live in Alaska. Back in the 1970s, early 1980s, my mother had split up with my dad. She was a single working mom raising a snot-nosed kid, yours truly, and built up a portfolio of over 50 rental units way back when, before there were podcasts by smart guys like you.
Before it was the cool thing to do. Yeah.
Training and all that kind of stuff. So she built that up. So I kind of always was around real estate, just, being a kid, I didn't pay much attention to it. I went to school and went to university like I was told I was supposed to, and graduated way back in 1990 with a useless degree in psychology and not too many job offers knocking at my door. So I said, what the heck, why don't I go see a bit of the world? So I traveled around Latin America for about 2.5 years and settled down in beautiful San Jose, Costa Rica, and ended up living in Costa Rica for a decade and started a business down there, got married, had kids, did the whole thing and had a pretty good life for about 10 years. And then in 2003, we decided to pull the plug, leave everything and move back to Canada. And that was because at that time, our kids were getting towards school age. We thought Canada would be a better place for them to grow up. Plus, being the pasty-faced white guy I am, whether you or not in Latin America, people kind of assume that you do. And there's a bit of a target on you and your family's backs. And it doesn't happen very often in Costa Rica, but people do get kidnapped and held for ransom. I know 2 people that happened to. So it doesn't happen very much in my neck of the woods in Kamloops, British Columbia. But fast forward, we moved back to Canada, and I'd been gone so long, I was starting all over again from scratch. I didn't have bad credit. I had zero credit. I had been self-employed for so long, I was pretty much unemployable. We moved to a brand new city because I knew northern British Columbia wasn't going to cut it for my Costa Rican wife. So what was I going to do, right? And I hadn't been able to sell my business. So quite frankly, I didn't have very much money either. And then I don't know if you guys remember those. You remember those late night infomercials that came on TV at 1 o'clock in the morning and said, you too can get rich in real estate with a little or no money down. You guys remember those?
That was like, honestly, my first introduction was a Than Merrill Flip This House free seminar in Anchorage, Alaska. So I think what you're familiar with. Yeah.
Yeah. So this particular variety was a gentleman named Ron LeGrand. And I said, little or no money down. That's perfect because that's what I've got. So I bought the course, got this big, you remember, it came in big boxes with binders. And I think I might have had a VHS cassette or 2 in there. And off I went. And my first little kick of the can with real estate was doing 18 deals in 18 months in and around the relatively small city of Kamloops. We had a population of about 80,000 people at that time. That's when I kind of first really kind of got into real estate investing. I caught the eye of an up-and-coming real estate guru up here in Canada, kind of the Canadian version of Robert Kiyosaki. And he saw what I was doing in real estate, and he saw what my background was with marketing and whatnot. So I went on board with him, took a break from active real estate investing, helped him grow his company from 2 employees to 128 and 7 offices and about $200 million a year in revenues. And then I got back into real estate investing in 2010 And that's when I started realizing I needed to raise some capital because I was doing a different strategy. I don't know if you guys are familiar with tenant first rent to own deals, where you basically find a tenant buyer, run out, buy them a house, and then lease option it to them for the next 2 or 3 years while you help them get qualified for financing. So like most of us, I self-financed my first couple of properties. By that time, I built up some credit, had some cash. But then, like most people, I eventually hit the wall, ran out of credit, ran out of cash, and kind of got stuck. And that's when, of course, that's when the perfect deal lands in your lap, right? It's right when you don't have the cash for it. And I can remember this vividly. Perfect tenant buyers came into my office. I said, great, let's go get you a house. Got one under contract. The only thing I was missing was about $85,000 for the down payment, closing costs, all that kind of jazz. And I don't know if you guys have ever heard this, but I'd heard, hey, you know what? If you just find a good deal, the money will find you. Have you guys ever heard that expression?
Oh yeah,
Yeah.
absolutely.
So I thought, hey, that sounds great, but I probably still need to do something, right? So I'd also heard, hey, if you want to raise money fast, pick up the phone and start dialing for dollars. Call everybody you know, pitch them your deal, raise some money that way. So I tried my hand at that, and I called and got rejected. Called, got rejected. I'd like to say I did hundreds of calls and just ground it out. I didn't. My poor fragile little ego could not handle that much rejection. I did probably maybe a dozen calls, said, you know what, this sucks. I don't want to do this anymore. So I quit doing the calls. Excuse me. Then I also remember hearing, hey, you know what? If you need to raise money, go out, turn every conversation into a real estate conversation, network schmooze, do your elevator pitch, your 30-second commercial with people and raise money that way. So I tried that. I went out to the local Chamber of Commerce, went out to the local BNI, Toastmasters, wherever there's a group of people and they let me in the door with my little stack of business cards, off I went, and failed miserably at that as well, you guys. And by this time, I had run out of time. I needed to get a 1-week extension on closing, on subject removals. And that's when I came up with my brilliant idea. I said, hey, you know what? I chuckled because it was so stupid. You know what? If enough people see this deal, it'll sell itself. Have you ever heard anything like that? This is such a great deal. If enough people see it, this deal is going to sell itself. So the one smart thing I did is I put together a list of about 200 people that I already knew, like I knew these people. And then I put together a PDF deal overview, and I emailed this thing out to all 200 of those people. And I went to bed that night and I was all excited, got up the next morning, and I saw that I got a bunch of replies in my inbox. I thought, great, finally, something's working. And I was so excited until I started reading the replies. And then basically they're saying, hey, Dave, dude, I haven't heard from you in 5 years, 8 years. One guy hadn't heard from me in 18 years. And the first thing that shows up is, hey, it's Dave. I got a deal. Have you got any cash? And basically every single one of them told me to take a hike, take a long walk off a short pier, whatever you want to say. And bottom line, you guys, that deal went up in smoke. I had to tell my tenant buyer I couldn't buy them the house. I had to return their 10 grand to them. They were some ticked off. The seller was obviously very ticked off because I tied up his house for three weeks and wasted everybody's time. The realtor was ticked off. Mortgage broker everybody was ticked off. I lived in a pretty small town, so I had some major egg on my face. So I lost that deal. But the most painful part of that in hindsight is because I charged out like a bull in a china shop, I really turned off a lot of potentially great investors because I was so clumsy about that whole thing. So after sniveling around for a little while, feeling sorry for myself, I said, you know what? Let's use this as a learning experience. And then I shook my head and I said, Dave, you dummy, if there's one thing you do reasonably well, it's marketing. Why don't you try to apply marketing to this whole raising capital process and try to figure out a way to ideally get investors reaching out to you instead of you having to chase after them. So by hook and by crook, I came up with what I call my 5-step money partner formula. I put it to use for myself. worked really well when I was doing those rent-owned deals. I raised, well, it wasn't a huge amount of money, but I probably raised somewhere around 500,000 to 600,000 altogether for rent-owned deals. Then I got into multifamily investing, raised millions of dollars for multifamily deals, following the same process. But more importantly, over the years, at this point, literally we've helped hundreds and hundreds of investors across North America. We got lots of American clients, Canadian clients. We got clients as far away as Australia, the UK, one guy in South Korea. So the process works, and cumulatively, our clients have raised hundreds and hundreds of millions of dollars for their deals following this simple process.
Yeah, and that's what I liked about the book. It's very concise and laid out. And
you know what I like about the book, Greg? It's got lots of pictures in it.
I said, had to keep your copy down. Yeah,
no, I like illustrations myself.
Oh yeah, but it's a lot of what you talked about. I mean, if you had done everything that you ended up doing in the beginning, yeah, you probably would have had that deal. And I think a lot of us get the horse before the cart, or the cart before the horse, or whichever one you do wrong. Sometimes you get into a deal and then you're trying to do all the other stuff that probably should have happened first. And we were talking before we started recording that, you know, Darren and I kind of feel like we're at a plateau on our money raising, and I think it's a very important subject, whether you're either just going to really raise from friends and family, and it might be a dozen people that you're pulling from, or if you're trying to create thousands of people on the mailing list. I think your steps are valuable for either approach. You mind if I just name the steps, and then we can kind of chop them up a little bit?
For sure, yeah.
Okay, so the step one is gather, filter, and reconnect. We'll just read them all, and then we'll go back to number one. Step two, present with poise and power. Mm-hmm. I'm curious what you think about how maybe the Zoom revolution has changed a little bit of how the expectation of presentation is, if that's changed. Anyway, step three, communicate constantly and consistently. Step four, demonstrate expertise and authority. Step five, initiate the snowball effect. And step six, well, it's success stories, which you can read the book when you download it from the show notes. So let's go back to step one, gather, filter, and reconnect. And, from your introduction, that sounds like when, instead of sending that blast to everybody that you remember from your high school reunion, what would have been the more correct approach to kindle old relationships or keep new ones going? Or
well, a bit of both, right, Greg? So that's the thing. It's kind of it's not a static thing when we're talking about raising capital. It's always kind of evolving, especially as you guys know, right? Maybe you start with friends and family, but eventually you have to kind of work outside of that sphere. But I guess one of the big realizations I had early on is the whole chicken and the egg, and that whole idea of find a good deal and the money will find you is, in my experience, is baloney, unless you've already got your investors ready to go in the wings, right? So that is, if I could wave the magic wand for people, it would be that you got a group of people already lined up, ready to go, eager to jump on your next deal. Now, maybe they haven't cut you a check for 50 grand or 100 grand or whatever, but they have committed. They've at least said, you know what? When you've got a good deal, I want first dibs. Maybe they've signed off on an expression of interest, a letter of intent, whatever you want to call it, but they've shown some serious interest there. Now, big advantage there is now you can go forth and you can start finding deals. You can be making offers. You can get properties under contract with confidence because you know that you've got the money there to back you up. Does that make sense? So that's part of my philosophy now is chicken and the egg. The money and the investors come first, ideally, and then you go looking for the deals. Now, Step number one is to create a target group of prospective investors. And again, you guys, I'm talking about people that are just getting started with raising capital. So rewind your experience 4 or 5 years or whatever it is to when you were first starting to raise capital for your deals, or longer perhaps. I think the best way to get started is focusing on people that you have that pre-existing relationship with. Your friends, your family, your co-workers, business associates, people you know from church, from civic organizations, etc. For a couple of reasons. Reason number one is logic, right? You got to think about this. If you want somebody to invest 50 or 100 grand or more with you, that person needs to know you, like you, and trust you with their money. And the big mistake I see a lot of newbie capital raisers making is they think everybody and anybody with a pulse and a checkbook could be my investor. And that's inaccurate, right? Number one is common sense. If you're going out to the general public, to strangers, they don't know you, they don't like you, they sure as heck do not trust you with their money. So you're starting from scratch, and that's difficult. Second big challenge is legalities. Caveat here, I'm not a lawyer, I'm not a security specialist, I'm a real estate investor and a marketing guy. I'm just sharing my understanding. So both in the States and Canada, we have regulatory bodies that say you and I, as mom and pop investors, are not allowed legally to raise capital from the general public unless we're licensed to do so. So stockbroker, mortgage broker, financial planner, that kind of person, or we've set up a corporate structure, or got an offering memorandum, or we've got things in place that we've got certain exemptions and whatnot, which typically for a lot of people, that's a pretty expensive step to take, especially when they first get started. However, there is an exception there, and that is if you're working with close friends, family, and business associates. So generally, we are allowed to work with these folks, use their capital to go forth. And again, get your appropriate legal advice before you do anything crazy, but that's my understanding. So why don't we start with these people? Because that's the most logical place to start, and it's the best place to start to stay out of trouble with the Securities and Exchange Commission. Does that make sense, you guys?
Yeah, I have an immediate concern with that is why would anybody, sometimes I think you're a Frito-Lay salesperson doing a W-2 job at one point, and then you're talking to your friends and family about buying a $3 million property in Tennessee. Is there sometimes a disconnect when you do the 180 on people from what they think they recognize you as into what you're trying to accomplish?
Yeah, that's a really good point, Greg. And I'm going to assume that you've done a deal or two already under your own steam, financial steam, whatever that deal looks like, single family home, flip, duplex, whatever that deal looks like, right? That would be ideal. So you've got a little skin in the game financially, you've got some experience under your belt. You don't need to have a ton of experience, but ideally you've got 1 or 2 deals under your belt already. So then the question becomes exactly that. Why would somebody invest 100 grand with an ex Frito-Lay sales guy, right? So that's
No.
why it's so important. That's why it's so important that we do this properly. Because if you do it the dumb way that I did, it's just like, hey, it's Dave, I'm doing real estate now. Have you got any cash? That's not going to fly very well. So what we do instead is we ease into that conversation. And that's the second part of this first step is, create that target group of a couple hundred. So if you guys are taking notes, you want to have a target group of about 200 people that you have a pre-existing relationship with. And in the book, I tell you exactly where they are and how to create that list and simplify that. It's not as hard as it sounds. But then the next part of that step is reconnecting with these people on a personal level first before we start our spiel about real estate. We call this a warm-up campaign. So what we do, and we do this for our clients because my real business is we've got a boutique marketing agency. So We teach people what to do, and then we offer them done for you solutions, right? So what we do for our clients is we'll send out a 3 email sequence to their list, their target group of 200 people. And the whole idea is to break the ice and reconnect with folks on a personal level first. The first email that goes out is just a nice, warm, friendly, hey, it's Dave. Hey, it's Greg. Hey, it's Darren. Chances are it's been a while since we reconnected. Just want to reach out, say hi, let you know what I've been up to. Here's what we've been doing. So you do a little update on what you've been up to for the last, let's say, 3, 4, 5 years. More on the personal level. Don't get into the whole real estate thing. Don't make it weird. Don't try to subliminally NLP people into thinking about investing with you. It's just like a genuine reconnection, right? Here's what I've been up to. Here's what the wife's up to, the family's up to, the names of the kids, the dog, travels, moving, new house, new job, whatever, right? Good stuff, not so great stuff. And then at the end of it, here's the trick. Well, that's what I've been up to. What about you? Please, please, please hit reply to this email. I'd love to reconnect. Now you can automate a lot of this. You set this up in an email autoresponder, send it out to all 200 people, personalized for each one, all at the same time. And then your job is to respond to people who reply to you. Because there is, in my experience, there's money in those reconnections, you guys, right? So you send that out to all 200. Don't worry, you're not going to get 200 replies. You might get 12, 15, 20 replies back. Some will be teensy weensy little short ones. Others will be paragraphs long, who knows, but just get the communication going. Have that virtual conversation. 3 or 4 days after that, we send out a second message, same idea, different modality. I highly recommend you do a video version of that first one. So just you in the video, hey, it's Dave, I thought I'd try something different. Give you a little video update, what I've been up to, blah, 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 blah. At the end of it, hey, love to hear how you're doing. Please hit reply to the email. Let's catch up. Send that one out. Again, the reason we do a video is a little bit different. It's more personal. It tends to have a deeper connection with people, tend to get higher response from that one as well. And then the third message is where the magic starts. The third message is what we call the transition message. And this is kind of our first marketing shot across the bow, so to speak. So transition message would be something like this. Hey, it's Dave. It's been really good reconnecting with you over the last week or so. Want to let you know that moving ahead, I plan on doing a much better job of staying in touch, letting you know what I'm up to with real estate investing. Real estate is something I'm very passionate about. I'm doing really well with it. In fact, I think real estate is the best way for everyday folks like you and like myself to make an above average return on our money, backed by a solid, tangible asset, and that's a real piece of property. And who knows, maybe sometime in the future, you might even want to partner with me and share in the profits on a deal. Okay, and in the meantime, if you haven't had a chance, love to hear how you're doing. Please hit reply to this email. Let's catch up. Send that sucker out. Does that make sense, you guys? So ding, ding, ding. Trying to create a bit of a connection with people. You send that out to 200 people all together. Statistically speaking, you should probably get around 30 to 40 people coming back to you, reconnecting, give or take. And if you do it right, you'll get very few opt-outs. In fact, our experience has been if you've got 200 people on your list through that whole process, and actually in that third message, I encourage people to opt out if they'd rather not hear about us. But through that whole process, if you do it right, you'll probably only get 4 or 5 people actually opting out. The vast majority will stay. But it sets the stage now for everything else. Does that make sense?
A couple things come to mind with your very first email message. There's a level of authenticity, and you're trying to get personal, almost vulnerable, if you will. I'm big on that. I think they're just vastly underrated principles in the universe. And, I think one thing Greg and I have learned is that if you don't like someone personally and on a personal level and have some kind of commonality, you can hang out and drink a beer or whatever that is, I don't care how much money you have and want to invest in my deal. And we've been through that. So, and you said early on too, that 1, 2, 3 sort of series of emails. I always use the term, and it's a common term, right? Is you start to drip on them but you don't go in attacking with, hey man, let's go make some money together. Yeah,
guess
it's
who
not.
made that dumb mistake, right? So
Yeah, yeah, sure. And I think we all have it. Do you find, Dave, that most of the people you actually work with or coach, if you will, are new people trying to raise money, or they come to you with a similar story to yours? This is what I've done so far. Help me. I guess it can be both. Either they're needing
it's
help.
both. It's both. We've worked with both. Majority are people that are brand new to raising capital, because this is, in my opinion, and I'm very biased, of course, it's a very good way to get the ball rolling, for sure, and raise that first $1 to $2 million from your sphere of influence. That's what we're kind of really focused on.
And you're not necessarily, you don't have an asset class of real estate that you're focusing on. You're just like, here's how we raise money for whatever you're doing.
Yeah, we've had clients that span the gamut, all the way from flippers to syndicators to self-storage guys to note buyers to tax liens, tax deeds, rent own, BRRRR, pretty much you name it.
How about hard money lenders?
Not so much hard money lenders.
Okay.
More active investors. Yeah.
Right.
Yeah. So very good point. I like what you said about the vulnerability side of things, Darren. And I think that's really important. So in those, excuse me, those first two messages, I always recommend that you talk about the good stuff, but you also drop a nugget or two of kind of the crap stuff that's happened in your life too. But you always end on a good note. Don't dwell on it.
Yeah.
If I was catching people up on 5 years, lots of good stuff's happened. Some crappy stuff's happened too, right? So mention it.
Yeah.
Just don't dwell on it.
That vulnerability, definitely, I've experienced that multiple times over and over. When you share your lessons learned, you say they're mistakes, but they're lessons learned. People automatically know. I'm just going to go ahead and say it, because I had this exact conversation with somebody else today. Was you're not a bullshitter.
Yeah.
For the most part.
Yeah, and let's come back to that part when we talk about step number 2, which is creating what I call your $1 million investor presentation, because that's super important there as well.
Yeah, I got one more question on maybe the first step, and then we'll dive into step 2. Do you recommend that, with social networks and things like that, that you have some kind of presence online that is consistent with probably that third letter? So that I would imagine that if people are reconnecting with you and they see in this last letter that you're in the real estate investing, my tendency would be like, get online and see what he's up to and do a little bit of vetting. So do you recommend, while at the same time, little to no experience or even having some experience, that you have some kind of online presence that is reflective of what you're up to in real estate? And it can be on just your personal feed as well. It doesn't mean that you have to have a .com for a business or anything like that.
Well, I actually highly recommend that you do have a .com. I highly recommend, especially these days, websites aren't crazy expensive. I highly recommend that you have an investor-focused website that's separate from your general real estate website. You know what I mean? Because a big mistake I see a lot of people making is they just try to add an investor tab into whatever their normal website is and just kind of tack it on. I recommend you have a completely separate website, and then that's where we're going to send people to do their quote unquote due diligence about us, and kind of that actually is going to become your online marketing hub, which we'll get into in step number 3. But good point. Okay. Yeah, you want to have an online presence. You got to be careful with the whole social media thing for a couple of reasons. Number one is if you get carried away and it looks like you're soliciting investors through Facebook, that can be dicey, and a lot of people do, and they get away with it for a while, but until they don't, right? So you got to be careful there, you guys. And the second reason is you don't own that platform. Mark Zuckerberg owns that platform. He can change the rules. He can kick you off. He can do whatever he wants anytime he wants, and he does. So we're real estate investors. we like to own stuff. We don't want to rent stuff. You're just renting space with Marky Mark instead of owning it. So own your own online real estate, own your own website. Does that make sense, you guys?
Oh yeah, yeah, good point. So, all right, step two, boom, you were lucky. You got some responsive, you got a little bit of an audience.
Yeah. Well, okay. So again, you guys, this whole warm-up campaign is not designed to start getting you meetings. However, what we found is in about half of our clients' cases, they actually do end up getting people reaching out and saying, hey, Greg, what's this real estate thing you're doing? What are you up to there? So now you got to be ready for that in case it happens, right? So if you're not ready for it, it's going to be like, deer in a headlight. What the hell do I do next? How do I present my deal? How do I have an investor meeting? All that kind of good stuff. So what I have found, you guys, is that if you've got a really well put together, organized, professional looking slide deck presentation, like a PowerPoint or a keynote, that's really effective for a number of reasons. Reason number one is it helps keep you on track, right? I don't know about you guys, but I can go off on tangents very easily. And unless I've got something to follow, squirm. I'm all over the place. So if you got a slideshow, it's going to keep you on track. Second of all, it's going to be more visually interesting for the other person to look at, especially if you're doing things on Zoom like a lot of us are these days. It's more interesting than just staring at your pretty face. And third of all, it really just kind of simplifies the whole process, right? Especially if you've got a well-organized slideshow. It walks people through step by step by step. It explains your process. It really shows them what's in it for them. It's a good way for you to be able to feature some of your past deals, show them an example of the kind of deals that you do, and just walk them down the yellow brick road, so to speak, to where it just makes sense for them to invest in. So step number two is all about creating what I call your $1 million investor presentation. Doesn't mean you're going to raise $1 million from your very first presentation, but over time, if it's well organized, you should be able to easily raise $1 to $2 million, if not more, from that presentation.
So this is along the lines of an investor pitch deck, which we've all done and done a webinar on for raising money for our deals, but yet it also encompasses step by step, because let's face it, even people we have existing relationships with, they have I've just realized we're bad at, hey, these are the steps that take place. We just go, oh, hey, you'll receive the PPM on such and such date. What's a PPM? What do I do?
That's exactly right, Darren.
So it also includes those steps and all those questions we always get asked, but also includes, to your point, history of what we've done, some sample returns of what we're giving back to our investors. That's so simple, but fantastic.
Well, here's the thing I realized, you guys, and please don't take this the wrong way, but you and I and anybody who's watching this podcast, we are what I lovingly refer to as real estate weirdos. Okay, we love this stuff, right? The average human being does not. The average human being doesn't really understand real estate investing. And if we move ahead assuming that they do, we're making a big mistake, right? So what I always try to do is make it Reader's Digest level. You guys remember Reader's Digest? So that was a magazine for grown-ups. However, it was written at a level that an average 13-year-old can understand everything in that magazine, right? It wasn't written for 13-year-olds. It's written for grown-ups, but it was written to be super simple to consume. We want to do the same thing with our presentation. So I always assume that the other person doesn't have a clue about real estate investing, real estate terminology, any of that kind of stuff. So I simplify it. I don't like the term, but I dumb it down a lot. Okay. And try to, and the other challenge that a lot of us have is a lot of real estate investors are analytical. They're numbers people. They're good with the numbers. They like crunching the numbers on deals and graphs and charts and spreadsheets and all that kind of stuff. Well, nothing is going to make the average person's eyes roll in the back of their head with boredom than charts and graphs and numbers galore. Does that make sense, you guys?
Makes me sad. Makes me a little sad. So
It makes you a little sad. But
Greg's
you know
a
what I'm
graph.
talking
Greg's a
about,
graph
right?
nerd.
Yeah, I know, but the average people are
Okay.
not, right?
Yeah, I got you
They're
for
not
sure.
out on them.
I'm very average.
They zone out, they get confused, and then a confused mind always says no. They won't
Right.
admit they don't understand something. So that's, again, the power of a really good presentation, you guys. Simplify the heck out of it. Have some of those graphs and stuff hidden in case, in case you bump up against another analytical, then you guys can go to town and share your graphs and have fun with that. But if you're dealing with the other 90% of the population, you can keep it super simple.
Yeah, and I just want to touch on some of that is, we do these little accountability pods, or a few of us will get together and work on goals collectively. And one of the guys was doubting his experience a little bit and whether or not he had the know-how to talk to his friends at work
Whether he is
about.
worthy.
Yeah, exactly. And we're like, dude, you own property. You're doing this. You're not speaking.
You want to
from
hear a
ex-
statistic?
You're not making stuff up. You're speaking from experience now. And he eventually put together a small PowerPoint or something and had a lunch with a coworker. And he said it went great. So, it's just the courage to get beyond yourself and give yourself credit for the work that you've done, or if you've invested in education and you've spent some time studying this, even if you don't have a deal under your belt. I think you're absolutely right. You get immersed in this and you think this is just common knowledge, and it's
Right.
and it's not. And a good way to realize that is, if you listen to podcasts and you hear somebody talking about astrophysics or something, like it's just secondhand to them.
Yeah.
So
a good
realize
rule
that,
of thumb is that Reader's Digest thing. If you could
Yeah.
explain it to an average 13-year-old, and they would, if they paid enough attention to you long enough, and they don't actually understand it, that's the level that we want to be at. Here's an interesting. You're a math guy, Greg. This is a statistic, so take it for what it's worth.
oh man,
You've heard about statistics.
All right, skepticism's already.
Yeah, exactly. So I don't remember where the hell I got this one from. But 95% of the general population, present company excluded, 95% of the general population has never purchased an investment property before. Their own house does not count. Okay, their own house does not count. The statistic I've heard is 95% of the general population has never purchased an investment property before. So if you have even one successful deal under your belt, you're ahead of 95% of the non-real estate people that you know.
Yeah, I think that's probably.
That's amazing.
It wouldn't surprise me. Yeah.
So we got to keep that in mind, because again, I see this is a big hang up for a lot of people. Well, because they hang out with guys like you and they listen to podcasts and they go to RIAs and stuff, and they see the rock and rollers in there that have done 50 deals or they got 3,000 units in their portfolio, and they go, okay, well, that guy or that gal can raise money. They've got enough of a track record, but poor little me, I've only got 2 or 3 deals. Why would anybody invest with me? Well, the reason is they don't know, like, or trust the other guy. They do know, like, and trust you. And if you position yourself properly, if you do this kind of stuff, you're going to be seen in their eyes as the real estate authority. You're going to be seen in their eyes as the real estate guy or gal within their orbit, within their sphere. Does that make sense?
Yeah.
So that's what we're really going after. And
go ahead, finish, please.
Well, I was going to say that's one of the benefits of this process is we're not trying to become the next Robert Kiyosaki with a Rich Dad, Poor Dad book that sells 8 gazillion copies. That's not necessary. All we need is to be real estate famous in the eyes of our couple of hundred people that's it. That's all that really matters, at least to get started with.
And
Yeah,
one of the most,
yeah.
we've been doing this 3 years full time, 4 years total real estate. And one of the most gratifying experiences that I have, that we are starting to experience over and over because we've been in it long enough to have a refi come along and sell a couple properties and all of that good stuff, is that we sell a property we had a partner in. They're reaching out like, hey, what do you have going on? What's your next one? I have a friend of mine who I went to high school with, his wife, and barely met him 2 or 3 years ago. He just sold a cabin in Sevierville, Tennessee, which is like one of the best Airbnb markets in the country, in the US. And he bought the cabin 8 months ago. That tells you what he's doing with the cabin, because he can't refuse it. And he's like, and he's also a partner in a current deal. And he just hit me up. Hey, I'm doing this. What do you got going on? Here's the amount of cash I'm about to make.
Here's my money. Yeah,
Yeah,
exactly.
and
What else are
that's
they going to
what's
do, right? Especially
right.
non-real estate people. Where else are they going to get the kind of returns we can probably get them, backed by a solid tangible asset like real estate is? Like if you guys are getting people into good solid multifamily deals, I mean, it would be illogical for them to put their money anywhere else.
So maybe just to close out step 2, I think we're getting close to it, but I wanted to ask for maybe this online Zoom meeting or something, or if you live in the same town, you're meeting at the local coffee shop.
Yeah.
Can you box in, hey, your PowerPoint doesn't need to be 62 slides. This whole thing might take 15, 20 minutes or something, and then just talk about
somewhere between 20 and 30 minutes is kind of what we're shooting for these kind of conversations. And again, we got to remember, you guys, what's my goal from these general kind of investor meetings? My goal is to get an expression of interest from the other person. I'm not trying to get them to sign me a check for $100,000 on the spot. That's not how it works. If I'm meeting with you, Greg, it's going to be at the end of the conversation. One of two things is going to happen, Greg. Either you're going to see that for whatever reason, this isn't a good fit for you right now, in which case I want you to feel perfectly comfortable letting me know that. Or on the other hand, you'll see it is a good fit and you want to see what the next steps are. And don't worry, I'm not going to ask you to cut me a check today, but you'll be seriously interested and you want to take it to the next level. Does that make sense? So we get started with that whole conversation, whether that's in person or it's on Zoom, doesn't really matter. I find in-person meetings are obviously a little bit more personal. You can sit down, you can have coffee with the other person. It's a little bit more, you can, it's a nicer experience. However, Zoom is much more efficient. And the beautiful thing about Zoom is you don't have to live in the same town. They can be clear across the country and you can just jump on Zoom and have the exact same process, right? The exact
Yeah,
same.
and I think there's just a whole lot more people comfortable and familiar with online meetings than there was 16 months ago. Right? So
Yeah,
it's become much more of the norm than 2 years ago. People would be trying to figure out how to log in.
What's your take, Dave, on, let's say we're doing a pitch deck for a specific deal. People have signed up for the webinar, they're online. Yep. And or if this was your .com presentation that people can go to, you provide just enough information to wet their whistle, but you don't give enough to make a decision, but it forces you to go into, let's say, your portal, if you will, sign up, and you either have, with the previous relationship, can do whatever and get more info, or you have to book a call with that person and begin that relationship.
Exactly.
Do you like that approach?
Yeah.
Okay.
I think that's if you're doing a webinar, I think that's a good approach. Unless, because there's a couple of things you can do, right? Because you guys at this point, you've got a group of people who are already in the portal, who've already had conversations, who've already invested, who've already, vetted. You've already vetted. In that case, I might do a presentation for those people that shows them the actual deal and say, hey, first come, first serve. That's very effective as well, right? Because then
that's a great point.
Yeah, so it depends on how you're doing it.
Okay, thank you.
But all of this at step 2, you can do without a deal, which
Correct.
I think is part of it.
Yeah.
Yeah.
If you're just getting started, you might not have a live deal to pitch. And
Well,
if you were, you're like where
prefer that
you
you
were
don't.
20 years ago. You're like,
Yeah, I prefer that you don't
right,
necessarily
exactly.
pitch a live deal because it gets back to the chicken and the egg. Ideally,
Yeah.
you're pitching a sample deal, a
Right.
deal that you've actually done, showing it as a case study,
Mhm.
and saying, "Hey, I'm just looking for people that are interested in my next deal, who want to have first dibs on it. Is that something you might be interested in? If so, great. Let's get the expression of interest, and then whatever your process is, let's get you. If they're going to come on board, depending on the size of the deal, if they're going to be a joint venture partner or just a passive investor, or however you're going to be structuring your deal, right? Yeah,
And then just, I'll point out what I really like about this, step one and step two, these are systems that can be set up and can be repeatable processes. You know, if you have a webinar or a PowerPoint, that's can be an evergreen piece that you just create once. Hopefully you do it very well, and you can rinse and repeat them a little bit.
yeah. I would I would do that if I were in your position, you guys, where you're syndicating deals and you're kind of at that level. For people that are just getting started, perhaps doing smaller deals, I don't recommend the evergreen thing. It
Mm.
loses that personal feel. You're going to get a bigger bang for your buck with having one-on-one conversations versus just a generic video that was been
Mhm.
pre-recorded. That's my take on things.
Yeah, fair enough. Uh,
Hey, it's Greg from Real Wealth Solutions. If you'd like to know more about our passive income opportunities, jump onto realwealth.solutions and hit that schedule a call button. We're always happy to talk about our multifamily and flip projects and to answer any questions you may have. Again, that's realwealth.solutions. We look forward to hearing from you. And now, back to the podcast.
cool. So step three, I think we're there. Communicate constantly and consistently. And then you have AKA educational marketing. So this
Yeah,
is where people they're interested. Maybe they are interested in what the next step would be. Um,
well, this is we've
what are some of those
we've
tools?
got our
Yeah.
target group, right? We've broken the ice with those guys in step number one. We're ready to go. We've got our investor presentation, our slide deck ready to go. Now it's time to turn on the gas and start shaking the tree and seeing what falls out, right? So this is the marketing, and I call it constant, consistent communication with edutaining marketing. That's an important part, right? Edutaining, because we always got to keep in mind that the vast majority of those 200 people are not real estate weirdos like us. They're average human beings. And the biggest mistake, I see people making lots of mistakes with their marketing. Number one is they overeducate, right? They become a fire hose of information. They spray out all this stuff. They regurgitate all this stuff that they've learned because they think everybody really wants to know. Nobody gives a crap. Here's the thing, right? They want to know that you know your stuff. They don't want to know the minutia. If they did, they'd be listening to your podcast. They'd be taking courses. They'd be doing their own deals. Does that make sense, you guys? So we always got to keep that in mind. That's a big, big mistake. Another mistake is that people are very episodic and sporadic with their marketing. I've got a deal. Holy crap. Now I gotta shake the tree, market. All this stuff coming out. Then whatever happens, the deal falls through, or they do manage to raise some money for it. And then it's crickets for 3, 4, 5, 6 months till the next deal. Then it's active. And it's just this fits and starts kind of thing. Well, let me ask you this psychologically, would you want to invest with somebody who does things in fits and starts, right? Where you don't hear anything from them for 6 months and then they're all over the place and then it dies down. No, right? Because that does not show consistency or reliability to me. That shows a very up and down kind of person, very unprofessional. And then the other mistake people make with their marketing is they just put out information, but they don't tell the other person exactly what they want them to do, right? So people say, well, Dave, is it really possible to get investors to reach out to you, to get investors to book a meeting on your online calendar, to get people to call you up? Yes, it is. Dave, how do you do it? It's kind of simple. I tell them what to do. Right? So you do a little bit of edutaining marketing, whatever that looks like. It could be a monthly electronic newsletter is very good. That's a great idea. Keep it light. Remember, don't get too carried away. Don't actually make it too newsy, right? But have some pictures there. Talk about some of the fun stuff you and the family been up to. Maybe feature one of the properties you're working on right now. Just briefly talk a little bit about some concept in real estate, very Reader's Digest level, but have some jokes and cartoons in there. Keep it light, right? And then at the end of it, say, hey, if you'd like to find out more, click here and let's book a call, right? Or you do a video log and you're doing a short little video, a little training about something basic level with real estate. Maybe you're talking about the different profit centers in a multifamily deal. Perhaps today you're talking about cash flow. So you explain what cash flow is and how much your investor partners love the cash flow checks they get from their deals and blah, blah, blah. Hey, if you'd like to find out more about cash flow and the other 7 ways our investor partners and ourselves profit from our multifamily deals, click on the link. Let's book a call, see if it's a good fit for you. So we have a specific call to action at the end of all of the different marketing. And again, one of the cornerstones I think to effective marketing is having a really good investor focused website, because that's going to be your online marketing hub. Everything is going to come from your website to your contact list, and everything's going to encourage your contact list to come back to your website to consume that information. Because I don't want to be posting stuff here, there, and all over the place. I want people to come to my site, because there I can control the conversation. Hopefully I create some curiosity, poke around, watch some of the other videos, check out some of the pages, click on that Contact Us tab. That's the goal. So we always got to keep the big picture in mind there, you guys. So constant, consistent, edutaining marketing, little bit educational, little bit entertaining, Reader's Digest level. Don't get too heavy, but that consistency is super important. So we always want to shoot for at least once a week. Your list is getting some sort of marketing piece from you, and it's not all salesy, right? It's edutaining. Does that make sense, you guys?
Yeah. So is DaveDubeau.com, that's your landing page for the investment side of?
No, it's not. That's kind of my landing page for my done for you services side of it.
Okay. Because I came across your vlogs. I can't remember which .com it was. So we'll figure it out and we'll put it in the notes. But yeah, you are doing what you're saying everybody should do. And yeah, it was great. I'm like, wow, this guy's putting out a lot of educational content. So yeah, kudos to you.
Yeah, so that's step number 3. It's all about the marketing. Marketing is what really, once you get that dialed in, that's what's going to get people booking those appointments with you. That's what's going to start getting some investor meetings popping up on your calendar without you, because you can automate a lot of this stuff, right? You can set it up ahead of time and set it and forget it. That's beautiful.
Yeah, and for the vlogs, you can film them kind of all at once. You don't want to do a 7-minute vlog and schedule that. You're basically going to burn an hour of your time anyway. You're better off setting aside an afternoon and writing the copy and going through a bunch of them all at once. It'll save your sanity, I think. That's what would be my approach to it.
That's our approach too. We do this with our clients, because again, most people don't know how to do a video log. So that's one of our services. We just walk them through the whole thing, film it, edit it, upload it, send it out for them, so they don't even have to worry about that.
You do still mention direct mail, and I wouldn't say I was surprised by it, but I was a little surprised by it.
Well, let me explain.
Has that become a niche? In that, I'm just curious.
So here would be my recommendation if you're serious about it, you guys, and you guys, I would highly recommend this for you guys, definitely, because you're full-time real estate investors and you're raising capital and you're syndicating. I would definitely look at direct mail, and here's why. Do you guys know roughly what your open rate is for the emails that you send to your list?
Kim does.
Yeah.
One
Well,
of us does.
if you're kicking ass, your open rate might be 25%.
Okay, I think she said it was 30 something, but
Okay, so then you're double kicking ass, which is great. Your open rate on direct mail will be 100%.
and why? Because I'm thinking as we're just talking about it, and I was thinking to myself, when's the last time I got a real estate newsletter in the mail?
Exactly.
So it sounds like I get a lot of mail that immediately just gets thrown away, but there's something to the novelty of the specific subject matter receiving in the mail, of which I see no other
Yeah, plus you're
representation.
not sending out, you wouldn't be sending out a postcard type mailing or a flyer type mailing that looks like junk mail. You'd be sending out something in an envelope with your return address on it, with their name and their address on it, and a live stamp. Ideally, that's the kind of stuff you should be sending out, and that kind of stuff has virtually a 100% open rate.
And so just maybe a paper version of your newsletter or something similar to it.
Yep, for sure.
It's just
Seasonal
a joke.
greetings, right? Well, how many birthday cards do you guys get these days in the mail?
Yeah,
Wow.
very few.
I can't remember last time I got a birthday card in the mail. I don't, how many Christmas cards do we get these days in the mail compared to, we're all.
That's true, right? Yeah, they used to be
Remember-
strung all over the house and over the
Exactly.
hearth and upstairs the door.
Hardly anything anymore. So now, again, it's one of those things. Old school is new school because everybody's just doing everything online now. If you do a few things offline, that doesn't have to be a lot. Doesn't have to be to everybody either. So what I always recommend is, out of that group of 200 people, maybe come up with your top 50 list, and those are the people that you focus on with the direct mail, in addition to all the other stuff that you're doing.
Mhm. Yeah, that's a good one. I like that.
Well, it's just like a handwritten thank you note. Those go
Yeah.
a long way, especially these days
Yeah,
for anything.
for anything. Exactly. But if you systematize it, you do it monthly, even if it's not handwritten, it's that drip, right? That constant drip.
Yep.
Mhm.
I like it.
Okay, right on. I think
Step
that,
number 4.
yeah, I was going to say that pretty much covered step 3, I think.
Yeah.
Step 4, demonstrate expertise and authority.
Right. So this is all about the trust factor, you guys.
Mhm.
Because again, when we do it this way, we're focusing on people that we have that pre-existing relationship with. They already know us. Hopefully they like us. Now we just really need to work on that trust factor, right? They might trust you to babysit the dog for the weekend, but do they trust you with your 100 grand yet? I don't know, right? So that's what we got to work on. And there's all sorts of different ways that you can do this. What you guys doing the podcast, that's huge. That's a great way to create authority and credibility. Now, most people aren't going to go start their own podcast, right? So there's some other simpler things that you could do. Basic stuff. Again, a lot of the marketing is going to help you out with this. If you have a sharp looking website, that helps. That constant, consistent communication, just the regularity of it, that makes you look a lot more professional. And then when you are actually sitting down with somebody face to face or on Zoom, if you're talking with them about investing, this is my recommendation. Okay. My recommendation is dress up, right? Dress up a bit, put on the blazer, put on a nice shirt. If you're Zooming, that's all you need. And here's why. Subconsciously, it's showing the other person respect, and you're going to get a bit more respect back from them as well. That's been my experiences, at least, right? You don't have to. I just find it's one of those little things that does help a little bit. Speak knowledgeably about your investment strategy and the market or the markets that you're investing in, why they make sense. Again, Reader's Digest level, be able to explain it at a simple level. And again, just some of these other things, sharp looking materials, little things go a long way. Like don't go cheap on your business cards. Invest a few bucks in classy, really good business cards. In fact, some of the cards that we do for our clients cost about $3 each. for a business card.
Wow.
Right? But I tell you what, you give somebody that card, you get the holy crap reaction. That's the nicest card I've ever seen. And they feel guilty as hell throwing it away.
That's a great point. That's a great point.
Your psychology degree is coming in better than you give yourself
Mhm.
credit for.
Yeah.
One of the things that, there's a reason I got all those books back there. And it's not because I love writing books, because I don't. It's just a really good book is a business card on steroids, you guys. These things never get thrown away, right? So if you author or co-author a book with somebody and give them a copy of that and dedicate it to them, that sucker's never getting thrown out. That's going to be on the coffee table. That's going to be in the bookshelf. It's a constant reminder. So there's a few. Get interviewed on podcasts. You don't have to have your own podcast. Get interviewed on podcasts. That's great. Then put that interview up on your site. Let people know that you got interviewed on this podcast. Make a big splash about it. Put it up on the social media. All that kind of good stuff. That goes a long way. Speak at your local RIA, right? You don't get involved with your local RIA. You don't even have to speak all the time. But if you're one of the organizers and you're introducing people and people just see you as one of the authorities in the group, that goes a long way as well. So there's all sorts of different ways that you can boost your credibility, even if you don't have a gazillion deals under your belt.
Yeah, and we always, we started a meetup locally, still run it. We recommend people doing that. We always add to that suggestion is that you don't have to have an hour presentation on some heavy subject about real estate every 3 weeks at the Holiday Inn. We have a friend that he basically is just a facilitator of a networking event that meets every month, and he is a tremendous response to it. And isn't really doing anything more than basically being the facilitator, organizing it, promoting it a bit, putting it where it can be found, and doing it consistently. And a lot of people respond to that.
Like even a cash flow night, like Kisaki's game.
Oh yeah. There you go. Right.
That kind of thing. All of those kind of things are super, super effective. So lots of things that you can do. Expensive, not expensive, easy, a little bit more difficult. There's all sorts of different things that you can do to demonstrate your expertise and authority. And one of the big ones is consistently show people what you're doing with real estate investing, right? That's one of the reasons I love video, right? So you can just, when you're touring one of your properties, grab your phone, do a selfie video. Here, I'm taking a look at this property, and then talk about something, right? It doesn't all have to be great. Hey, this got rid of a pain in the butt tenant. It's kind of a hassle. They did some damage to the property, thankfully, but always plug in. Always think, you always got to think strategically. Thankfully, we always have a contingency fund for damages. So not a problem. Our investors don't have to worry about this. One of the things our investors love, they don't have to deal with this crap because we do, right? So we always tie it in with what's the benefit for the other person as an investor with you, right? The fact that you guys are in there with your sleeve rolled up doing the work while your investors can kind of kick back and not have to worry about it.
Yeah, that's a good point. Something I still struggle with is actually getting out there and doing more active posting. So,
well, the two of you work together, right?
Yeah.
Mm-hmm.
Yeah. So you just go out to the property together. One guy films, the other guy talks. Then you switch, and then you can do a few little video snippets. You don't have to release them all at once. You can kind of spread them out over time.
Yeah, true. The snowball effect. This seems like what we all want to get to this level.
Well, your guys are there. Darren was telling us just a few minutes ago about, you got this one investor that just cashed out of a different property. Now he wants to put his money in with you, right? Or reinvest.
Yeah, I mean, we are seeing some repeat business, for lack of a better word, or referral type activity, which is awesome. We're
We've been in the
thankful
business, long enough to experience the snowball effect / momentum.
Yeah.
And for example, when we finally made the decision mentally to let go of our very first property, a 62 unit, deal flow came out of nowhere, opportunity came out of nowhere, 2 or 3 that we're probably going to take down right now. So just that whole thing as well, another universal law in Darren's mind. Not to take away your glory there, but I'll let you expound on the snowball effect.
No, I agree with you. So here's the thing. Once you've got 1 or 2 investors on board, it's much easier to get more because now there's proof of if you're doing a good job with them, obviously, right? Because now there's proof of concept. So a couple of things can happen. First of all, you can get that current investor to either invest more with you or to reinvest with you when they get cashed out of the deal they're currently doing with you, right? So that's one thing. So if you're doing a good job with that, that should be kind of automatic. The thing that's not automatic that we can control more is getting warm referrals from our current investors to their friends and their family members, right? Because these people tend to know other people with money. So if you're proactive about it, if you go about it the right way, you should be able to get really good testimonials and referrals from your current investors to bring on more new investors. So a couple of little tips about that. This is one of the things I love about Zoom, just like we're doing right now. You can jump on a Zoom meeting with one of your investors. Let's say you're having a quarterly review or a semi-annual review, whatever you do with your investors. Say, hey, I'm going to record this for posterity's sake. I'll send you a copy. And then as you're going through things, you can be planting the seed of some questions. Hey, Greg, so how you feel? Let's say you've had a good returns. You can tell that Greg's happy. Greg, how do you feel about the investment? Greg goes on and talks about how great he feels. And I can do a couple of leading questions there. And how's this compared to what you were doing before with your IRA or your mutual funds or your other investments? Oh, this is so much better. My return, blah, 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 whatever he says. Greg, that's fantastic. Those were some really good comments. Do you mind? Would it be okay if I use that as a video testimonial? And 9 times out of 10, Greg's probably going to say yes. If he says no, it might say something like, okay, would it be okay if I kind of wrote down what you said and used it as a written testimony? If the video thing doesn't work, you'll probably say yes to that. And then we can also say, hey, Greg, I'm glad that you're happy with this. Do you know anybody else who might be interested in this kind of a real estate deal? And then Greg says, yeah, you know what? My buddy Darren might be interested in this. Cool. How about if we do this? Do you think Darren might be up for having a little meeting to see how it all works? Yeah, he might be. Okay, well, it would be really weird if I reached out to Darren directly because he doesn't know me. Would you mind maybe doing a quick little email introduction? Would that be okay? And then we can get the ball rolling. We always want a warm introduction. You don't want to get names and phone numbers and start cold calling people.
Absolutely. I love the email introduction. One of my mentors taught me that simple thing, and it's instant credibility for whoever you're trying to introduce. I love it.
Yeah, and then the other trick with that is you want to make sure you give Greg the words you want him to say. Yeah. You want to give him an example. Hey, Greg, here's an example of an introduction somebody did. If you want to use this, if this makes your life easier, right? So you don't want to leave it up to Greg to do that on his own.
Mm-hmm.
And maybe I'm projecting some of my own insecurity here, but I think that a big barrier is just asking, is getting to the point where you just have to ask. And I think that's where I think I fall short on some of the things that I think, I could do to get more interest is you just have to ask. Yeah.
Well, it's about timing as well, Greg.
Yeah.
Right? So there's perfect times to do this. And that's what we want to look at. So some of the perfect times, in my opinion, to do both of these, referrals and testimonials, is number one, right when you're getting the deal started with the investor and they've got their first check. They've got their first payment from you. That would be a great time to jump on Zoom, say, hey, Greg, I just want to touch base. This is a pretty new deal for us. I just want to see how you're feeling. you got the first cash flow check we sent you, blah, 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 then that's a really good time. And you don't have to wait till the end of the deal. You can do it at the beginning.
Yeah,
of it.
that's a good point.
It's after you get proof of concept. So basically it's any time that you're talking with a person and the sensation is they're pretty happy with how things are going. So that can be at the beginning of the deal. Then let's say, I don't know if you guys have quarterly meetings with your investors or annual meetings or semi-annual meetings or however that looks. But whenever you're having a meeting with your investors, talking about stuff, reviewing stuff, and it's on a positive note, that's a good time to do both of those things.
Yeah, and then maybe we could just conclude on a couple more comments about the snowball effect. I think you would agree with this, Dave, as you mentioned it earlier, that episodic activity around closing a deal, raising the money, and then that deal closed, you've got to keep the communication going. We often do at least a monthly newsletter. So just don't let off the gas with the communication, and just full transparency. Good news, bad news, neutral news, otherwise, just tell the story.
Yep.
And I think that's will help get that snowball rolling. Is you can't just take the money and then never talk to them again.
Oh gosh, yeah,
That's probably one of the worst things you could do.
So-
And we've experienced that a little bit, and it's nothing but frustrating.
exactly.
Yeah.
Exactly. No, well said, you guys. Yeah, so that's it in a nutshell. I I wrote a whole book about the process. We do a full day workshop on the process, but that's kind of a little synopsis of how it all goes.
Yeah, and so it is called the Money Partner Formula.
It is, and if your folks are interested in it, I spared no time or expense putting together
Investor
this time for you
Attraction
for
Book.
Investor
Nice.
attractionbook.com. I'll trade it to them for their name and their email address. That'll get people into my orbit. And then if they want to attend a full day workshop after that, we make that available as well.
You got that in the States as well, or is that a?
Oh yeah, no, we do these on Zoom. So
Okay. Oh, right
that's
on.
why we've got clients from all over the globe now.
Oh, okay.
We do these workshops via Zoom. So
Okay.
usually
Yeah.
once or twice a month, we're doing those. Full
Okay.
day deep dive.
Yeah, we'll be sure to drop that in the show notes so they can dive right in. Yeah, I was really impressed. It's good. It's a good concise synopsis of what you should be doing. And if you're already have some success with this, it's always nice to have a reminder of the fundamentals of what you can be doing. So,
Well, thank you,
Darren, you wanna take us out?
Yeah, I just
Unless
wanna
you
make
had
a
another
comment.
comment,
No, well, I just want to make a comment, and I'm encouraged by the fact that I think we're doing a lot of what you mentioned, but there's so many simple things that you touched on that I'm like, oh my gosh, that have just kind of opened up the stratosphere for even more better ways to do what we're currently doing. I very much appreciate you sharing all that you did. I mean, because anybody that listens to this, you don't need much more, man. Just go out there and make it happen. And obviously we'll hope they'll get the book as well. So,
well, the price is right. The price is right for the book, that's for sure.
The price is very reasonable.
yeah.
I think even with the currency exchange, it's still zero.
Yeah, it's still free. Yeah,
It's
exactly.
still free.
Free Canadian, free US.
Free Canadian, free US.
Awesome.
Bitcoin, it costs you 1 Bitcoin. You're gonna have to
Well,
send.
yeah, I'll take it. That's fine.
So, Dave, for people listening and that will be watching, what is the best way for them to get in touch with you?
Yeah, that is still the best way, Darren. Just go to investorattractionbook.com, get the book. That'll get them onto my list. They'll have my direct email address from there. And yeah, that's the best way.
Awesome. Thank you.
Yeah.
So for my co-host, Greg Scully, I'm Darren Light. Thank you guys for joining us on this episode of the Real Wealth Solutions podcast. Thank you so much to our guest, Dave Dubeau. We hope that you found something useful from this episode, and we hope that you will forward it on to someone else if you think they will also benefit from it. So for now, till next time, everybody have a good evening.
Thanks a lot, Dave. Talk to you later.
Take care. Bye-bye.